Hi everyone, thank you all for tuning in. It's Trade with Ellie with all things trade, travel, and investing related. So today I want to cover a topic that is not exactly in line with trading or investing. However, it is helpful for both, and that's credit history, right? How you use your credit card, how you build your credit history, is super important, right? There's different techniques and different things that you can do to help increase your credit score. Your credit score is so important, right? When it comes to traveling, I love using my credit card to book my travels because a lot of rewards and bonuses and discounts and things that I'm able to get, even cash back, right? A number of different ways. If you've watched me over time or checked out some of my videos or followed me on other platforms, you've seen me share different tactics and techniques that I use to really make money using my credit card. But the great thing about that is that I'm actually using my credit card. So I'm building credit history, right? And so I'm making sure that my credit history is reflecting well so my credit score can be up, it can be good. So when it's time to buy that car, when it's time to buy that house, when they're doing checks to see if you can rent a location or whatever the case is, right? That I am getting approved and I'm getting some of the best rates. So today I want to share with you 3 things that can bring down your credit score, okay? So make sure that you're paying attention. Feel free to ask questions, right? I'll be doing a lot of videos relating to this because this can make such a difference in how you invest and how you travel and a number of different things, okay? So number 1, applying for too much credit or too much loan at a time can truly affect your credit score. Why? Because you're opening too many lines, right? Or you just have, especially if you're doing it at different times, okay? So applying for too many credit cards or too many loans is going to reflect poorly on your credit history. And the reason for that is the assumption is going to be that you don't have a certain amount of capital. And so whether you get rejected or not, it's going to show. And when you start having too many marks or too many negative inquiries, it starts to reflect poorly. So it might make a few difference in a few points, and sometimes it can really drop you down a lot of points. But think about this. I want you to look at it this way. Whether it's 1 point or 50 points, if you go to the car dealership and your credit score is off by even 1 point, that can make a difference between you being able to get, finance for a car, right, or not, or whether if you get a better rate, a lower rate, right, or versus a higher rate. We all want the lower rate. We all want to get approved, but that 1 point can make all the difference. And so be careful when you're applying for credit cards, right? Be very mindful about what card you're getting, why, and if anything, do them at like the same time, but just be mindful of how many you're applying to or how many loans or just different things that will reflect if you're opening up new lines of credit. The second thing is paying your bills or paying your loans, right? Can affect negatively if you pay late, right? If you pay late, it's going to reflect negatively on your credit history. And what happens is that depending how late you pay, it also shows that. So it'll show that you have a late payment. It'll show if you're 30 days late, 60 days late, 90 days late, right? And by how much. So the way that they keep track of how much you're paying and at what rate or when you're paying is super important, because let's say you do need a loan or you do need a new card for whatever reason, and you're going to an establishment and you want them to approve you, they're going to look at your history, and the first thing they're going to say is this someone who's reliable? If I lend you money, are you going to pay me back in a timely fashion? And life happens. So things happen, and there's reasons why maybe you were late one time, or maybe something came up and something happened, but those notes can also be documented and shown there, which can help you. But however, if you're having a lot of late or missed payments with no explanation as well, that's being reported onto your credit history, that can work bad for you. Once again, it can reduce your credit history. It can reduce your credit score, and it will look bad to other lenders who are deciding whether they want to lend to you or not. And third thing, using way too much credit, which it sounds crazy, right? You have a credit card and you are using it to build credit history, and now they're saying you're using it too much, right? And what they mean is the utilization. So in terms of your credit card, you have a balance. If you're using too much of that balance, it's going to look bad. It's going to look as if you don't have enough money. So now they're questioning, okay, does this person really have money to eventually pay back? What is this person's circumstance? So the goal with this is that you want to use your credit card, but you want to pay it off on time, right? So you don't want to max it out though, right? You don't want to max it out. You do want to use it, but you don't want to use more than 30% of that balance. So whatever your balance is, you don't want to exceed 30% of that balance. A lot of credit specialists will say, you know, you don't want to exceed about 10%, but you might need your card for a lot of different reasons. So if you do use it, pay it off before your due date, right? You can check and you can either call the establishment of your credit card company, and you can see when your cycle kind of starts, when it's being reported. So therefore you can pay it before it is reported. So every time there is a report, it's reflecting that, you know, it's already paid, or that the borrowed amount is much lower, which that will reflect positively on your credit history, right? Because it shows that, okay, this person is using the card, they're not using too much of it, but they're using it, and they're also paying it back in time, right? Or even earlier. And so that actually will reflect well and will help to kind of give you a couple of points for good credit history. So I hope that helps, right? These are 3 things that can bring down your credit score. However, if you utilize that information and do it the right way, they're the same things that can bring it up, right? So I hope that helped. If you have any questions, feel free to ask questions in the description below, and I hope to see you in my next video.